Hello everyone and welcome back to the course. And in this lesson, we will take a look on very important concept that will help you understand logic behind making profit in stock market. In case you are trying to make profit in stock market and have only booked loss, then there is problem with your understanding of making profit. And with help of this lesson, first I want to address that problem. So let's start with the last line that you hear in every mutual fund's advertisements. All investments are subject to market risk. Read all scheme related documents carefully. Which in simple words mean when you are investing your money in stock market, you are subjecting your investments to risk of loss. But against this risk, you can also make exceptional rewards. While investing, majority usually expect if I analyze my stocks properly, I would make profit even if 50% of my stocks will perform as expected. If we take that into consideration, this is risk reward curve with respect to which you are trying to invest in stock market. A perfect unidirectional linear curve with perfect 45-degree angle for risk of every single penny. Expecting this perfect line on risk reward curve is main reason for your loss. There are two problems associated with investing method designed for this expectation, which guarantees you a recipe for loss. First, a perfect linear curve is only possible if you can control both risk and reward while investing, which by no means is true. While investing, you can neither control risk nor you can control reward. Both of them are controlled by market. Next, it assumes you will succeed with your stocks at least 50% of the times, which again is not really true. Every year, thousands of businesses are listed in stock market, out of which hardly 50% survive for next 5 years. Hardly 10 to 20% survive for 10 years. Out of these 10 to 20%, only few manage to grow in size with time, and only 1 or 2 businesses become industry leaders of tomorrow. Let me be brutally honest here. A business that can generate more cash than it needs to survive is a fundamentally strong business. So if a business has generated what it needs to survive for next 100 years without growth in size, it is still a fundamentally strong business. Fundamental strength doesn't drive prices of stocks. Improving fundamentals does. And majority of businesses that manage to get listing on stock exchanges are usually fundamentally strong enough while getting listed. They usually start deteriorating after listing. After every 10 years, almost 50% of Fortune 100 companies in stock market change, and rest stocks change to such a huge extent that it is hard to find businesses that were listed 10 years ago on it. Business failure rate in stock market is more than 50% in spite of strong as well as improving fundamental strength. To respect the risk reward diagram in front of you, stock market must be able to maintain average win rate of 50%, which again is not true. A slight change in failure rate more than 50% will instantly turn your risk reward diagram into this. Even failure rate of 51% will deflect risk reward curve in direction of risk. You may see profits for very short term, but final result will always remain loss. This means if you will invest by keeping reward or profit in mind, the final result will be loss. And that is going to happen because you cannot control risk nor you have any control over reward in stock market. Probability wise, we can say that stock market gives you 80 to 90% risk of losing money against just 10 to 20% possibility of reward. A market where risk is more than reward is better known as risk market. Opposite of risk market is reward market, where reward is more than risk. Example of such markets are banks, provident funds, government funds, and money deposit institutions, where your risk is relatively less as compared to your reward. Profits in such markets can be represented by current diagram. As you can see, in reward markets, the amount of risk is either very less or as good as non-existent. For example, bank deposit gives you 2 to 3% profit. RD might offer 5 to 6% profit. FD 6.5 to 7%. In case you are senior citizen, 8%, and finally, provident or government funds offer 8 to 8.5%. The maximum profit on any reward market in India is not more than 8.7% as per March of 2018. Your range of profit in reward market ranges from 1% to maximum 8.5%. You only have to make selection which kind of investment you want to make. Depending on either you select savings account, fixed deposit, recurring deposit, provident funds or government funds, you are as good as guaranteed to make reward. All you have to do is maintain account till maturity. Risk is less, so are your rewards. The reason I am telling you this so that you can understand, in reward market you manage reward more than risk and you have some level of control on both risk and reward. This comes with limitation of limited profit. Opposite is true in risk market. In risk market, you have to manage risk more than reward, and you have as good as zero control on both risk as well as reward. But it comes with one huge benefit. The potential of reward is not limited. And therefore, people who understand how to invest in their respective risk markets are making extremely big profits. Stock markets, bond markets, commodity markets, currency markets, debts and security markets, mutual funds and real estate markets, all of them are risk markets. And they offer massive profits, not because the people who invest in them are trying to manage profits. The reason why people succeed in risk market because they manage risk, or in simple words, losses. The current diagram represents risk reward curve in risk market if risk is managed properly. In short run, you may not see growth, but by making sure risk remains less, reward potential can be exponential. In easy words, this is what we call compounding growth in profits by minimizing losses. In simple words, in risk market, you have to manage risk to make profits. Listen carefully. I said you have to manage risk, not take risk. Taking risk is a recipe for loss. Managing risk is a recipe for profit. So, the idea that stock analysis offers you provision for profit is one of your biggest misconceptions about investing. Stock analysis is not provision of profit. It is provision for low risk on your investment. Motive of this lesson was to help you understand that in risk markets, profit can be made by managing risk. You cannot manage profit in risk market. Management of profit is only possible in reward market. Stock market is risk market, and to make profits in it, you are not supposed to manage profit. You are supposed to manage risk associated with your investments. So, stock analysis is not provision for guaranteed profits. It is just provision for low risk. Moral of the story: as investor in risk market, you do not invest to make profits. You invest to keep your losses short. In other words, as investor in stock market, you are not investing to make profits, but to keep your losses short. With that said, watch this lesson again if required. Understanding of what we learned in this lesson is important for you to understand what exactly we will be doing as analysis. So thanks for watching this lesson and see you in next lesson.